Okay, welcome back. So the SGX is indicating a 280-odd point lower start. So a little bit of improvement from the time that we first looked at it at 8, but not by much. 1.5% lower, in line with what the rest of Asia is trading at. Overnight, of course, if you're just joining us, we saw very deep cuts. 5%, 4.5% and 5% cuts respectively on the S&P and the Nasdaq. So, I mean, in light of that, a percent and a half, I mean, I think would be par for the course. Also, of course, with all the gains that we've had very recently. Let's set you up in terms of trades that you may want to take and how to approach the market. Mitessh Thakkar and Sudarshan Sukhani are joining us to help us do that. Gentlemen, great to have both of you here. Thank you very much. Sudarshan, to you first. We get that gap down, but what after that? What would you advise viewers to do?
Good morning, Vishal. See, we get that gap down. It's not a gap down. It's a monster gap down and supported by very weak global cues. So in such an environment, despite the fact that we are in a bull market, I would not trade at all today. It's not worth it because the gap down actually signifies increased volatility. Volatility means a random directionless market. It's better to step aside and then we'll wait for tomorrow to see how the stability comes in. That applies to the Nifty and the Bank Nifty both. I would not trade any of the indices today.
Okay, wouldn't trade any of the indices today. Better to be a bit cautious given the gap down. Got that. Mitessh Thakkar is also with us. Mitessh, good morning. Would you concur with that view that it's better to just step aside because of what's happening globally? And if we do stabilize and the dips do get bought, then what should be the trajectory for the day?
Good morning. So I think the start should be very similar. I think, once you open gap down, first thing is that you will possibly want to exit some of the longs which you're carrying. Secondly, you would want to see whether the gap down is getting bought into or not. The levels which I watch closely on the Nifty is 117,870 on this spot. If that breaks, then I think this correction could possibly extend about 17,500. So if 17,870, 850 holds, then you might want to explore some kind of buying, but you can only decide once the market is open and you've seen about 20-30 minutes of trading post that. So in that sense, I think the first idea would be to at least cut down your long exposure and see whether you want to add more at lower levels in case the Nifty is getting some kind of support post the gap down.
Okay, all right, Mitessh, morning. We've got that view. What about individual stocks?
Well, I've obviously kept a couple of buy calls in my list, some sells as well. Coromandel is a sell with a stop at 1,048, targets of 1,005. Page Industries, if it breaks 48,000, and that could happen with the gap, sell with a stop at 48,400 for targets of 47,200. And on the buying side, our conditional buys, I've identified two stocks when the pattern is good, the structure is good, but if they start getting past yesterday's high, then buy. So IndusInd Bank, buy above 1165, keep a stop at 1149, look for targets of 1,200, and Power Grid is a buy about 227.5 with a stop just below 225 for targets of 234.
And what about individual stocks? Sudarshan, what would your list be?
Yeah, sorry, yes. See, Sonia, it's one of the rare days when I don't think I want to recommend any stocks for intraday trading. So, because it's the same story. We don't know where they will open, whether they will find support, whether they will find resistance. We don't know anything about the market status at all. I have two stocks which I want to talk about. If you are a positional trader, if you are an investor, or even if you are a swing trader who's willing to carry positions for a few days, there are two stocks which can be used to buy for buying in this dip. The first is ICICI Bank. It's an outperformer, and I think if you accumulate or if you buy this dip, you'll end up with some money. It's not intraday at all. And the second is L&T, Larsen & Toubro, which has been an underperformer, but I think has better prospects.